Good morning, everyone. We have just listened to Trump delivering his Liberation Day speech, and we were wondering whether this would clear up the uncertainty, but it's done quite the opposite. It's added to the uncertainty. Initially, the US markets were up. The NASDAQ was up about 1%, and the futures from the top, when he started speaking, to the bottom, the NASDAQ futures are down over 4% as I speak. Anything could happen. But at this point, before our market opens, NASDAQ futures dropped 4% from top to bottom. The S&P 500 futures dropped 3.3% from top to bottom. And it's been described as it couldn't be any worse. It's the worst case scenario. The expectation or hope was that there would be the baseline worst expectation was a 20% tariff across all countries. And as you have doubtless seen by now, he's got a minimum 10% tariff across all countries. And let's just read some of these out. China, 34%. His formula is he's going to charge half of what the US is being charged by other countries. So it's a half reciprocal tariff. But that leaves China with a 34% tariff. EU 20%, Japan 24%, Vietnam 46%, India 26%, South Korea 25%, Thailand 36%, Switzerland 31%. And there are 60 worst offenders that are being charged tariffs, well above what people expected. Small things, Mexico and Canada, the 25% fentanyl-related tariffs remain, no more, no less. And the sector-specific tariffs on aluminium, steel, auto parts, those all remain as they were, 25%, and there are other specifics. But it is a worst-case scenario. On the back of that, initially things like bond yields and US dollar went up, but now they're falling. The expectation is that this will impact US growth. This will reflate inflation. There was a bit of research from Yale University suggesting that a 20% tariff across all nations would raise the household costs in the US for each household by $3,400. And so this is inflationary in the US. It's all going to be passed on through the tariffs are all going to be passed on to the consumer. So the market's beginning to react to that. Bond yields are dropping on expectations. Growth is going to be affected. Inflation is going to pick up. The gold price is up. And the US dollar has dropped and the Aussie dollar has dropped, and commodity prices dropping as well. Copper prices dropped in the futures have dropped since the chat. So the suggestion is, of course, if growth slows, commodity prices drop. Australia's been singled out for beef, and that it seems there's been very little negotiation about it. Other things are assume nothing. I think from this point, what do we do? Well, we're in 100% cash in the strategy portfolio, which is looking rather clever now. And we're in 83% cash in the growth portfolio, and we've only got a couple of gold stocks, which are probably going to go up. So we're positioned pretty perfectly. I don't think it's time to try and make money doing something speculative, but some of you may like to, and we'll write about that in our growth portfolio, but it could be doing things like buying some of the ETFs that make money when the market goes down, things like SNAS, which is leveraged, probably a bit aggressive, BBUS, Bear, BBOS, that sort of thing. So you could try and make money out of the market continuing to go down, or indeed buy gold or gold stocks on the expectation that this is going to continue the gold price rally. There are lots of questions being asked. One of them is, will the White House take calls? Is this a negotiating ploy? Some of the US media suggests that it is, and that tariff landscape will look very different in a month or two's time. As I say, there are going to be many twists and turns, so let's not assume too much and assume that we could get a announcement from Trump tomorrow saying, I've spoken to the Chinese premier and everything's great, they're our best friends. So we just don't know what we're dealing with. As I say, it's added to the uncertainty. And the suggestion is this is not the last chapter on tariffs, this is chapter 3 of a 10-chapter book. What will the EU and China in particular do? I think we are now in a world of more uncertainty where we are expecting reciprocal tariffs. The EU has already said, if you saw them yesterday, has already said, we didn't ask for this, we don't want this, and we have all the tools necessary to protect ourselves from this. So they're quite antagonistic. The Chinese were supposed to wait for certainty on tariffs before stimulating. So the hope was that this uncertainty clearing up would cause a rally in the resources sector. That isn't going to happen at this point. The Chinese aren't going to stimulate in the face of this, not till it's worked out. And the bottom line is Trump's strategy going to work? And his strategy is to get everybody to manufacture in the US, spend billions of dollars in the US. My personal suggestion is, a personal opinion, is this could massively backfire. This could be a huge economic and political misstep because no company, if you're the chairman of a major European or US or Japanese car company, are you really going to commit billions of dollars to take the initiative and build a manufacturing plant in the US on the foundation of Trump's policies, which could change next week? No, you certainly weren't. And rather than respond to Trump, the likelihood is most big manufacturing companies will, one, learn to trade with the rest of the world, and two, outlast the US presidency. It's only 4 years old, and rather morbidly, there's an actuarial assessment which suggests that Trump is got only a 79% chance of lasting 4 years anyway. Point being, you don't spend billions on the back of temporary policy. So the bottom line is our market, if it follows the, we'll see in a minute, by the time you watch this it will have opened, but it looks like it's going to open over 100 points down, if not more, and that this has created more uncertainty, which is negative for the markets, and that there are going to be many more twists and turns before this story is over. We live in fascinating times. Thankfully, Marcus today is in 100% cash, and for the moment, that's exactly where we should be.